In today's video, we're going to be having a quick look at the viruses around the globe. We're also going to take a look at Hong Kong's laws and the new ones that have been implemented by Beijing. From there, we're going to have a quick look at the Australian situation, and of course, I'm going to take a quick look at American equities. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing to go over today is a little bit of a virus update for you. There are more than 10.4 million cases globally and we have exceeded 500,000 deaths worldwide. Now, there has been a number of things that have been said in the last 24 hours relating mostly to the US situation, but also here in Australia. New South Wales has shut down their borders to a variety of places in Victoria, where they are seeing a big growth of, or a second wave of infections. We've also seen a number of elements happening in the US. Naturally, infections are running rampant right now, where we've got more than 40,000 cases occurring every single day. Now, Dr. Anthony Fauci from the US has put a warning out there saying that this number could rise beyond 100,000 per day if they do not get it under containment. We've also heard from Fed Powell saying similar things, and that if it doesn't get under containment soon, then there are going to be problems long term for the economy of America. Now from there, at the moment, because of this, relating it all to the economy side of things, Goldman Sachs has put an estimate saying that roughly 40% of the US has either halted or reversed their plans for reopening their states. Now, that's obviously been because of a massive increase on the amount of infections on a daily basis. Moving on from the infections though, we've also got some information or more details on what's happened with these Hong Kong laws. Now, the first things to remember are that the laws are forced or made upon about secession, subversion, terrorism, and of course collusion. Now, that's a pretty broad spectrum to look at, but we've got a little bit more details. The actual laws were released. They were in Chinese, but they have been translated for us to a certain degree. So, all four of the terms carry a maximum of a life sentence. That's a pretty big time frame for doing some of the things that might be there, which includes non-violent protesting. We've seen it covers Hong Kong residents, it also covers Hong Kong non-residents, and anywhere globally in addition to companies. So it seems they can actually enact these laws in other places should they be able to get extradition orders done. Now, in addition to this, it allows for closed trials, meaning trials that aren't ever seen by the public. And of course, it grants immunity to Chinese agents in Hong Kong. Now, there's also a level of detail there that says media control and management mitigation will occur, meaning that we might start to see some level of the media getting curbed on what they can and can't say out of Hong Kong. Now, moving on to the Australian situation. Australia's got a number of elements going on today as well. We've seen Australian housing prices 4.8% in sort of all the major cities. And we've also seen the second consecutive month of falls in housing prices. Now, this is a little bit concerning because the Australian housing market has really been the golden investment for Australians. And of course, there's been a lot of offshore investment going into the Australian economy through their housing plans. So it does cause a little bit of a problem. Now, the next step is to have a look at yield curve control. Australia is now the second country to implement this ever. Before that, it was just Japan. And it seems to be having the same effect. Australian 3-year bond yields, which is where they were aiming to use the YCC, has been the worst in the developed world since yield curve control has gotten into place. So it's likely mimicking what the Japan scenario was when it comes to bond markets. Now, in addition to all of that, and slightly unrelated, but is something towards the economy and more the geopolitical nature of what's going on in 2020, we've seen that the defence plans for Australia have been updated. They are now planning to have $270 billion spent each year on defence and military spending. And that includes looking at things that might stop other people or other countries wanting to come across to Australia, and they're using it more as a defensive strategy rather than an offensive. But we'll have to see a little bit more on that because there's not exactly a great deal of detail on what they're really planning to do. Now, the next piece for you to have a look at is that it's the best quarter since 1998 for US equity markets. We've seen the S&P 500 rally about 20%. We've seen the NAS 100 move nearly 30%, and we've seen the Dow Jones move nearly 20% as well. Now, all of that put together in the worst economic period that we've seen so far, right after the worst stock market crash that has really gotten into place so far we've ever seen, or at least in my lifetime. So what is really pushing on driving all of this up? Well, I have spoken about it before, But the increase of stimulus and the massive amounts of it that have gone in have really taken a risk-off approach for a lot of investors, meaning that all of this push has got a lot of tailwind behind it in fiscal and monetary policy that is helping it move its way along. In addition to that, we've also seen 20 to 30 times the total number of investors in the market compared to what we were looking at back in 2019. So we are seeing a lot of speculators in the market, and a lot of people are starting to get a little bit wobbly now, considering where it's going to go over the next 6 months, purely because we might start to see stimulus starting to rock out. We are also starting to see the idea of housing markets starting to finally catch up with what's going on economically, and this reflects in Singapore as well. But realistically, we are going to start to see some of the implications from the global shutdowns really starting to catch up now as a lagging indicator. So definitely something to consider. My anticipation is that towards the end of this year, or at least the second half of this year as we lead up to the election, we're going to be hearing a lot more about the coronavirus, but as well, we're going to be keeping a main focus on what's happening from a geopolitical standpoint and some of the relationships that are going on around the world right now. So hopefully between now and then and the elections that come up, we do have some good information and some good opportunities coming for us. But be careful with your trading because it will likely be a choppy market for the rest of this year. Now, to move on from what we've seen with the S&P 500, the NAS, and obviously the Dow Jones, I'm going to have a quick look at the news ahead for today. We have Japan consumer confidence coming out. In addition to that, Australian commodity prices will be being released. And we've got European and United Kingdom manufacturing PMIs due later this evening. In addition to that, and I think the bigger one of the day is going to be the ADP non-farm employment. Don't forget, this Friday is NFP, the official one. So we'll be keeping an eye on what the figures are tonight for Friday's release. Now, in addition to all of that, today is a bank holiday in Canada, so expect reduced volumes around the Canadian dollar. Now, if there's anything from today's video that you've liked or you'd like to get in contact with me about, then please feel free to shoot me an email at talk2al@acy.com. And of course, like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.